Whew, so when I was 22, I was really a lost soul. Like, I really was.
You were a nun.
I
You became a nun at 22. Tell them.
I did a year of service.
Hello, everybody. I'm Fernando Rivera, your GBF Realtor of Austin, Texas. And in this series, talking about loans, I have...
Patricia Perez, UFCU Business Development.
What is UFCU?
University Federal Credit Union.
Credit unions. No, we're just going to jump right into it. So we're talking about getting loans from credit unions, specifically for mortgages.
Yes.
I am maybe like a lot of you, I think of credit union and I think of, oh, that's my grandma's bank. That's not a young, hip bank.
Right.
Is that true?
Well, that is the perception.
Okay.
And I was kind of the same way, like,
Yeah.
credit union.
'Cause I come
that just
from-
means it's kind of old. Yeah.
Yeah, I come from South Texas, and it's
Yeah.
like we have credit unions, and it's just like, oh yeah, those are like the old small town banks. Like nobody really goes there.
Yeah, like what can they do? They still probably give out little candies when you go and make a deposit
I mean, I wouldn't
or
be opposed
whatever,
to that.
right?
But you are FDIC.
Yes,
Okay.
yes. We're federally insured
Yes.
by NCUA.
Okay.
And so it's different from FDIC, but they do the same thing.
Yeah.
NCUA is specifically for credit unions.
Okay, so that pretty much means that like the money you have in the bank, that's not going anywhere, even if there's a huge downturn in the economy. They
Correct.
will always honor the balance that you have in the bank. So banks that are not credit unions are FDIC insured,
Yes.
and banks that are credit unions are.
NCUA.
I have not heard about that.
Yeah.
I'm glad you told me about that.
Yeah.
What's the difference between a credit union and a giant Wells Fargo, Chase?
Okay, so credit unions did really get started to kind of help the common person, and it's almost like a co-op. So, for example, UFCU, we were started back 87 years ago by a group of professors at the University of Texas. They had a need, and they couldn't get loans from banks.
Okay.
And so they thought, okay, well, let's just pull our money together, loan each other. They would keep records, and it turned into University Federal Credit Union.
So it was like the first Kickstarter bank.
Yeah,
Okay.
it's like a Kickstart. Exactly.
Okay, great.
Yeah.
You got to talk like the kids do, because if you don't talk like the kids,
You're right.
Because we're trying to get younger people to
Yes.
not be afraid to take out loans and to have financial stability and confidence.
Yes, absolutely. And credit unions are very much like, we want to help the community. We will do classes. We volunteer.
Oh, I have your classes. I'm ready to talk about your classes.
We have teen nights where we bring in teenagers and their parents to come to one of the branches.
So it's still very community oriented.
Very community oriented.
Okay.
Very community
And
oriented.
I will say, when I was trying to get a loan for my car, I was told to go to credit unions because I went to the Wells Fargo, I went to Chase, which I am members of, and it was just very like sterile, this is your interest rate no matter what.
Right.
And I don't have my home loan with UFCU, but I do have my car loan with y'all.
Right.
Because you gave me the best rate over 4 years. And that's another thing. UFCU is not just for mortgage loans.
Right.
Business loans, personal loans, car loans.
Yes.
You cover
if you
all
want to
of it.
just get started on something, like if
Yeah.
you don't have any credit, we have credit builder loans and credit builder credit cards. So yeah.
So I want to get into this. So you mentioned credit. Credit coaching. That's something that you offer.
Yes.
Is that complimentary?
It is complimentary. Thank
Okay,
you.
yes, exactly. Nothing in this world is free, but it is complimentary.
And in the mortgage world, we really can't say free. We don't give
Yes.
anything free. It is complimentary, for sure. Yes, we have a financial literacy group.
Who needs credit coaching? I was supposed to say.
Everybody.
Okay, everybody.
Everybody does. For example, if you've never taken out a loan, and I mean, you could be at my age. I'm over 50. That's all I'm going to say. I'm
Smart.
over 50. I did not have my first auto loan until last year. Because like on my own.
Okay.
Because before that, I was married. My ex.
And you're over 50.
I'm over 50.
Jesus.
I never had my own auto loan.
Okay.
I know.
That's
I know.
good.
So I didn't know a lot about auto loans. I didn't realize how easy it could be, especially working with UFCU.
Yeah.
So I called our consumer lending department and said, hey, I've never had auto loan before. I'm an employee. I'm shopping for me. I'm shopping for my daughter. I need some help.
Yeah.
Oh my goodness. They just took very good care of me and answered all my questions. I didn't know how it worked. I never negotiated.
Yeah.
Never negotiated. And so that's what I'm saying. Like education, like those types of education, it's for everybody because we don't know it all.
No, we don't.
really don't.
I mean, I'm learning stuff as I'm talking to you. I learned so much stuff with you yesterday, which is why I was like, we need to have this conversation.
Exactly.
So for the credit coaching, do they have to be worried about them pulling their credit and like dinging it if they're just even interested in checking it out?
No.
Okay.
So Credit Coach and Green Path, which are two complementary avenues for members or non-members.
So I don't have to have an account with UFCU.
No, you don't. You
I
just
can
have
just
to
get
talk to
complimentary
someone.
information.
Yes.
Okay.
So you just have to talk to someone like me, like my loan officers, like somebody at a branch, or you can even go online to ufcu.org and you can look it up there.
Okay.
And it's really nice. And you just have to use our QR code, our phone number, so that those companies, Green Path and Credit Coach, knows that you're coming through the UFCU channel.
I will have the QR code and the phone number for you all. Don't worry about that.
Yeah.
So it's not just for mortgages, essentially.
Correct.
It's for anybody wanting to have financial literacy and building their credit to work for that next step.
Yes.
Love it.
Budgeting, how to balance a checking account.
Yes, for those of you who don't know, checks are pieces of paper that you write an IOU to a business, and they will accept that and honor it.
If there's money in your bank account.
my Thea still writes with checks, and she will not go to a store that does not honor a check. I don't want to go to the Ross anymore. They don't honor my checks. Like, Thea, it's 2025. Like, come on,
really
she's never had a credit card. So Green Path for mortgage. So that one is credit education, budgeting. You have rental counseling.
Yes.
Pre-purchase counseling.
Pre-purchase counseling, and even when you already have a home, it could be going into foreclosure.
Yeah, that's our Green Path for existing homes.
Oh yeah,
I have that written
you
down.
You got it.
I'm ready.
I'm just going to follow you.
Yesterday.
Thank you.
And you're also approved by HUD.
Yes, for the credit counseling.
Okay.
Yeah, so because there are some down payment assistance programs through the state of Texas, and also some loan programs that there is a first-time homebuyer education that is required.
Yes.
And it has to be approved by a HUD certified counselor.
Yeah.
And those usually cost around $150. Going through Green Path, through the UFCU path, it is complimentary.
Yes. And HUD is the U.S. Department of Housing and Urban Development. It's a certified agency by the government, and it's very important that you are counseled by somebody who's actually been vetted and tested. So that's really important.
Yeah.
The Green Path for existing homes. You mentioned foreclosure prevention. What is foreclosure?
Oh gosh, when somebody gets behind on their payments.
Okay.
And it's to the point they're so far behind, it could be 90 days, it could be 120 days, where they haven't made a payment.
Yeah.
And the servicer is coming in saying, hey, you don't make this payment and we're going to foreclose, which basically means you're losing your house. So
it's great to be able to afford that down payment, to get into the loan, but once you're in the loan, you have to make sure you can keep affording that loan.
Absolutely.
Otherwise, the bank will take your home away. It doesn't even matter if you're homestead exempt, which means, other types of creditors, like if you have a car loan or if you have like an overdue credit card, they still can't take your home away from you. If you are behind on your mortgage payment and you're going into foreclosure, then the bank can take your home away from you.
Exactly. And so there's counseling for that too. They can call that number. There's no judgment there.
Yeah.
And there's even counseling for reverse mortgages, which
that was
if you are older, then a reverse mortgage may be the way to go.
Briefly, what's a reverse mortgage?
A reverse mortgage is a loan that basically you get the loan, and the equity from your home, you get paid to you. So if you're an older person, maybe you need some more income, your retirement income or your pension, is it helping you make those bills? What happens is every month you get a little bit paid to you, and it's on your equity. And so the only time that really you have to worry about that is once you pass away. There's options for the survivors and on what they want to do with that particular home.
Yeah, so if you have a family member that you really don't like, then take your reverse mortgage out and then be like, they're supposed to pay it.
It's on them. That's funny.
Just kidding, don't. This is not legal advice, this is for pure entertainment purposes.
But there's counseling on that too.
Yes, there is. And so you have several programs that help people get into homes. You have a down payment assistance program.
Yes.
What is a down payment? A down payment is essentially saying, like, I have this much money to put towards the home, so you know that I'm good for the rest.
Absolutely. It's security for the company giving you the loan.
Yeah.
There's risk involved. And so the more money you as a consumer put down into the loan as your down payment, the less of a risk.
Yes, which is why you don't have to pay private mortgage insurance. For a lot of loans, if you put, you have to put 20% down of the actual price of the loan. And if you do that, then you don't have to pay private mortgage insurance, which is extra money ensuring that you'll pay the loan back. And that's also why you might want down payment assistance. If you can maybe just make 15% of the down payment, but you want that full 20, then you can do the down payment assistance program, get that extra 5%,
And you can even do the down payment assistance on an FHA loan, and it really does cover your down payment.
Yeah, which is
amazing.
Yeah, because it's a little, it might seem stressful up front, but it saves you so much money on the back end, not having to cover that down payment, private mortgage insurance.
Yeah.
So for your down payment assistance program, I took a note. You cover up to 5% of the sales price.
Correct.
And it has to be the primary residence.
Correct.
Why can't I do it for an investment?
Because now an investment property is a lot riskier from the lender's
But I don't
point
have
of view.
to tell you it's an investment
Oh,
property.
yes, you do.
I do? Are you sure? Who's going to check?
Well, it depends.
I'm playing devil's advocate.
Okay,
I'm not actually telling you.
So actually, it is the lender's responsibility to look at the whole picture. Take you, for example.
I'm in Pflugerville right now.
Okay, you live in Pflugerville. That's your primary residence. You come in and say, oh, well, I'm going to purchase a home in Georgetown.
Yeah.
That's going to be my primary residence. The one in Georgetown's much smaller. It's not that far away. It looks like an investment. We're going to ask you questions.
Yeah, this is getting a little semi more complicated.
Yeah.
But if you use the homestead exemption, which means is used on your primary residence, the homestead exemption helps shelter you from paying too much in taxes on your residence, and you are taxed by the appraisal, which is the size of the home and things like that. And so, if you have your homestead exemption on the smaller home, it makes no financial sense to have the exemption on the smaller home when you know that the larger home is actually going to cost you more money to maintain.
Right.
So it's kind of shady where it's like,
that.
oh, my homestead exemption is on this tiny small home because it's my primary residence. It's like, that makes no financial sense.
Yeah.
Unless you really want to downsize and having a whole eat, pray, love moment in Georgetown.
And that could be, but we have to dig.
And so there's a minimum credit score of 680 for the down
Correct,
payment
for the
assistance.
down payment assistance.
Okay. You can't just say, I want the down payment assistance. You have to be educated on how that works. So you have to take classes.
Yes, there is that first-time homebuyer class as well, which we can cover it with Green Path.
With a special QR code
that
only the gatekeepers can give you. So moving on to different kinds of loan assistance and programs that you have the 5-1 ARM, adjustable rate mortgage.
Yes.
What does that mean, 5-1?
Okay. A 5-1 adjustable rate mortgage means that for 5 years, it is going to be at the start rate. So it's going to be fixed for 5 years.
Okay.
At the end of the 5 years, then it can adjust on an annual basis. Up to 2% each year, it'll only go up 6%. Let's say in 5 years, market is crazy and rates are maybe at 10%. That's not going to happen.
Yeah.
Then your interest rate is not going to adjust more than 2%. 5.49 is the starting rate on what I presented yesterday. And yes, I do need to disclose the APR. Maybe we can put that up later.
5.686.
Thank you.
Oh, I'm ready.
He's so good.
I'm ready.
Good choice as a realtor, let me tell you.
Let's
He
use
took a lot of notes.
a round number. Let's do 5.5.
Okay,
let's say the 5.5 is the rate.
Okay,
right?
then at the end of 5 years, the highest it can go is 7.5.
And after the 5th year, it'll go
adjust
to 7.5. And then the next year,
it could be 9.25.
And so am I stuck in those years just having to do
No,
the 2
you can
years?
refinance anytime. There's no prepayment penalty. You can refinance in a year if you wanted to.
And for those who don't know, refinance just pretty much means that you're going to start your loan all over again and take whatever rate is currently offered on the market. Right now, rates are at, let's say they're at 7%. And so you get into the 5.5,
5.5, yeah.
Yeah,
So,
5.5.
Yay.
And so a year goes by, rates still aren't better. A year goes by, rates still aren't better. Third year goes by, rates go down to 5%. You can jump out of that adjustable rate mortgage at no penalty cost.
Correct.
And then jump into a 5%.
Yes.
And ride that to the rest of your 30, 15, or 10 years, whatever it takes.
Correct.
There you go. I love that.
Yeah. And can I give you a little tidbit about a 30-year loan?
Why? What?
Okay.
Are they bad? I have one.
No.
Don't say they're bad.
If you get a 30-year loan and make one extra payment a year, like either a 13th payment or you take one of your payments and divide it up over 12 months, just get in one extra payment a year, you can knock your loan down to by about 9 years.
I've heard that and I started doing that. Wait, did I do that? I'll start doing that.
Okay, yeah.
No, what
it.
I do is I take my full mortgage payment for that month, I split it in half, and I make one payment on the 1st, one payment on the 15th. And that little amount, half a month, that you're knocking down that principal faster, knocks down the interest that you're paying on that faster. So it's a small increment, but you are paying off your loan a lot faster.
Much faster.
The same amount of money, just splitting it up so it hits the bank faster, so the amount you owe on your interest comes down.
Yeah.
So for the 5-1, it has to be primary residence, not an investment, not a second house. 760 minimum credit score, which might be a little hard for some people.
Yes.
But you do have credit counseling.
Yes.
So they can essentially do credit counseling with you,
Yes.
bump that up to above 760,
Right.
and then jump into an ARM.
Right.
Okay.
And ARMs typically, like over time, have been more like riskier and really for more the.
Oh, I was told to never do an ARM.
More
like
of
never
the
get into an
sophisticated
adjustable
buyer.
rate. Yeah.
So it has to be the sophisticated buyer. So that's the thing too, is we're never going to put someone into a loan if it doesn't make sense for them and if they don't understand it. That's the other thing too. It's all about education, right?
Yeah.
So this one's a 5-1 ARM. There are 3-year ARMs where it's fixed for 3 years.
But
So-
here they have to do 20% down.
Correct.
You
It's a more
don't-
established buyer,
Yeah.
more established person in their financial
So you want to make sure they're
situation.
not paying private mortgage insurance.
On
like
this
that.
one, correct.
Okay. I have a question for you.
Okay.
I love this, and I'm so sad that I didn't know about this earlier when I had other buyers. The question is, what do police officers, firefighters, volunteer firefighters, full-time military, reservists, 911 dispatchers, EMT, paramedics, registered nurses, teachers, teachers assistants, social workers, school counselors, principals, vice principals, adjunct instructors, and University of Texas at Austin staff members have in common?
They are community heroes in the eyes of University Federal Credit Union.
And that means they are eligible for
A loan program that has no mortgage insurance, very competitive rates.
Okay.
And it's a 30-year loan, primary residence, and what makes it really nice, and also the down payment is low. And so
how low?
Very low, less than 3%.
What?
Yeah. Yeah. You said how? Because University Federal Credit Union, we have portfolio loans where we basically are creating the loan, keeping it on our books. We're making the rules so that we can offer assistance to more people in the community.
These are occupations that don't have the income that allow them to squirrel away money for a down payment and
Exactly.
to make those ongoing
Yeah.
like larger interest
Yeah.
payments. So this is amazing because you're essentially helping the community
Get into homes.
get into homes,
Yeah.
which is exactly what realtors are supposed to be doing for you
Yeah.
all as well.
Yeah.
And so you don't have private mortgage insurance on these,
On that
even
one,
if they're like you're less than 3% and you're not requiring private.
Correct.
That to me is the biggest selling point. The fact that you don't have to have
Yeah.
more than 20% to knock out private mortgage insurance
Yeah.
for primary residences.
Correct.
So I need to have like an investor loan person come up and talk about investments.
We can do investments too,
Oh,
but
you can
not
do it
today.
too? Oh, she's like,
Hello.
okay, sorry. I got that done. The last one, and this is something that spoke to me, is the
Okay.
bridge loan,
Yes.
which you explain it first. And you know what? I'm going to tell you what the scenario is.
Okay.
So I have a client, and she is raring and ready to buy a house, but she has a house that she needs to sell as well.
Yes.
But she wants to go shopping before she actually wants to get her house ready to sell. And I'm telling her, like, well, if you find the house that you love, you're going to have this whole house on your hands that you're not going to have, the quick means to get rid of because you haven't prepped it yet. And of course, you might need the money from the sale to get into this new home. And then you told me about UFCU's bridge loans, and I thought, oh, that's the answer to my problems.
Yeah.
So for the bridge loan, how does this work?
Okay, so in that scenario, then we'll have to get like some information on
Okay.
what you think it's going to sell, and we'll have to get comps and all of that,
Yeah.
of course. But what'll happen is, your client can find the home, her dream home, right? We will do an interest-only loan for the home, for the new home, and we will not count her current mortgage in qualifying.
So the amount that she has to pay on her current mortgage is
Yeah.
not a debt against her.
Correct.
Okay, there
Yeah.
you go.
Yes, exactly. And so then we close on the new home. And once we close, she has 6 months to sell her existing loan.
And in those
Her
6
existing
months,
home, excuse
she's
me.
only paying the interest on her loan per month.
On the new one.
On the new home.
Right. She still has to keep up with her mortgage.
Yes.
We don't want it to go into
Yeah, she still has
foreclosure and
pay
have to
her
do
mor-
all of that.
She has to pay her mortgage and the interest on the new property.
Correct.
She-
Interest only.
Yes,
Yeah.
for as long as she hasn't sold it.
Right. And
Up to
so
6 months.
Up to 6 months. So at the end of those 6 months, either she refinances it and she can use the equity from the sale of her home for the new loan,
Yeah.
or part of the equity, or none of the equity. So you can save it for something else.
Okay. So
Yeah.
essentially, she would find this home of her dreams, get into whatever interest rate is offered at the time, right? She would only have to pay back for 6 months just the interest portion
Correct.
of that new loan here.
Yes.
On top of maintaining her current mortgage. Let's say she makes, $300,000 at the sale of her home.
Yeah.
She'll pay off whatever she owes on the mortgage of the older home.
Yeah.
and then she would have to refinance.
Correct, because we want to refinance her out of that interest-only loan. And it is a little bit riskier.
So it's a pressure for the realtor to like get this home off the book in 6 months, because otherwise your client's going to be up, poop creek without a paddle.
Right. Yeah. So that is perfect in your scenario for your particular client. Now, also, if you are looking at new homes.
Let's say D.R. Horton, because you love them so much.
I do.
Yeah, I know
actually,
because you work for them.
Yeah, I know, I do. And so if they're not writing contingencies in that neighborhood, because maybe like they don't have to.
And
homes
the
are moving.
contingency means that it's like
somebody has a home to sell.
Yeah, we'll sell you this home once you sell your other home. That's the contingency that's in the contract. A lot of builders don't want to honor that. They're like, no, we don't want to wait and see.
We don't want to take a home off the market.
Yeah, it's like we can sell it to this person ASAP. Why are we going to wait for you to sell your home in a market where homes are not selling as fast as they used to?
Exactly. Yeah. And so your client also is sitting there going, okay, well, I can't even lock in my sales price. Yeah. It's going to keep on going up until I sell my home. And so you could go in, your buyer can go in and say, no, I'm doing an interest only loan. And so that means I can close when you're ready. Yeah. And then that makes the builder happy. They get their stuff done. They don't have to worry about it anymore. Yeah. They're done.
Because they know it's going to get paid back. When you go under contract for a home, the sales price of the home is locked in. That interest rate is not locked in until everything gets approved at the very end. True. So you can go under contract for a home at a 6.9% interest rate, and then when you finally close on that home and you are finally approved for that loan, that interest rate could have jumped to 7.1, 7.2, 7.5. Yeah. So locking in these prices and locking in these rates is so important, especially in a market as volatile as ours.
Exactly.
And for the bridge loan, primary residence, again, a 700 minimum credit score, and then it's up to $1 million. Yes. Which is, that's a lot of money.
That is a lot of money. Yeah. That's a nice house.
That's a nice house. And so getting to the personal stuff, now we're getting to the nitty gritty.
Oh gosh.
You shared a very, wonderful thing about your life yesterday. What would 22-year-old Patricia say to above 50-year-old Patricia about her trajectory in dealing with money when you came from, I guess, a calling that told you to get rid of all material possessions? Yeah.
Whew. So what he's talking about is when I was 22, I was really a lost soul. Like, I really was.
You were a nun. You became a nun at 22. Tell them.
I did a year of service with Sisters of the Holy Cross. I lived in Salt Lake City. In a convent with 5 nuns in the Mormon capital of the world.
Love it.
Yeah, it was amazing. It really was. They were so nice to me. They really were. Those nuns, they loved me.
But
and
you
it was
wanted
really cool.
to be rich.
Yes,
and deal with lots of money.
Well, it's funny because I gave up everything. I lived in the convent. I made $75 a month. That was my stipend. What? Yeah, they gave me $75 a month to do whatever I wanted. It was amazing. It was also a long time ago. Yeah. And after that, coming back home.
And home for you is?
And home is actually Taylor, Austin Taylor. That's my hometown. It's cute. Home of the Fighting Taylor Ducks, for sure.
Come on, Taylor Ducks.
I had to work, had to figure out, money. I actually worked at a credit bureau way back in the day.
What's a credit bureau?
A credit bureau
I feel like that's like an outdated place. A bureau of credit.
It is. So what we used to do is, I know, gosh, I'm dating myself.
What's a landline? What's that like?
Oh my gosh. What's a fax machine?
Yeah, literally. Yeah.
Only 2 people had computers. We had to handwrite everything or type it.
Wrap it around the pigeon's leg and send it off.
Exactly. Yeah, we had a runner service. We did. Yeah, but what I wish I would have told myself back then is to really make a plan to save money every single time you got a paycheck. Every single time.
And you don't have to save 20% down. You can save 3% down.
Yes.
Like, you can save 3% of your paycheck.
Yes.
And see what that adds up to in 5-6 years.
Yes. So that's what I would have told myself. Do those little things. Treat yourself. Yeah. But have a plan and save it and actually make a budget. When's the last time you made a budget? Like, for real? Have you ever? See?
Next question.
I don't like your questions, Patricia.
I'm learning to budget my time better.
Yes, even
money.
That. Yeah, I know.
Anybody want to buy a house?
Yes, do.
Yeah, please do.
He's smart.
I mean, that's all the questions I had for you today. I think that's enough to turn people on to the idea of going with a credit union, versus a giant bank like Wells Fargo.
Yeah.
You do have independent lenders that may have other programs but they may not have the programs specific to credit unions.
Right. And here's one of the biggest myths, though, about our loan officer team.
What is it?
Is that people think they only work when the bank branch is open.
Oh.
And that's not true. So our bank branches open like at 10 in the morning and they close like at 6.
Yeah.
That means nothing to our mortgage loan officers. They are working all the time. They are just like any other loan officer that you deal with, whether it's an online company or a bank or a regular mortgage company, they're working too. They have to go out and get the business too. So that's a big myth.
And it's good to know, it's nice that they're hungry, because if they're hungry, then that means they're going to work with you.
Absolutely.
And they're going to help make sure you understand, because the more you understand, the more confident you are to do business.
Yeah.
Because the last thing you want to do is be intimidated to not do business because you don't understand things. And that's why I make these videos, because I don't want you to feel dumb asking the question, well, what's a credit union? Because I didn't know what one was or what made it different from a regular bank. If they want to look into mortgage education, do they contact you?
Contact me.
You, okay.
Yeah, contact me or contact any of our loan officers. I'll put you in touch with a loan officer to help you.
I will put a QR code on here. I might have already flashed it. I don't know what I'm doing with these videos until at the very end when I'm editing. But you will have access to Patricia's contact information along with those QR codes that will help you with Green Path and Credit Coach. So yeah, this is Patricia Perez from UFCU.
Yes.
And I'm Fernando Rivera, your Austin GBF Realtor. And I do this because friends don't let friends shop alone. So thank you, Patricia.
I love it. You're welcome.
Awesome.
Oh my gosh, I'm sweating so bad.
Me too. I'm like, oh, let me hide the sweat.